Hey, how's it going, everyone? So today we are looking at my M1 Finance portfolio, and we're going to be talking about three stocks that I'm going to be buying into probably the most over the next little while the market is currently still down pretty heavily. So let's actually go ahead and take a look and see how the portfolio is performing. If you're new to the channel, this is my M1 Finance account. I've been investing for about 2.5 years into this account. Obviously, you can see we are taking some L's right over here for this short time with the markets going the way that they are. I have a couple different slices you can see here. We got like a growth sector, retail, tech, industries, finance, and also real estate as well. This is M1 Finance. You can always check them out in the link down below if you want to also sign up for them. They give my viewers a nice bonus and you get more free content like this. So like I mentioned, we are currently in the negative for the week right now, down about $3,600. For the month, we're actually down about almost $8,000. It's kind of crazy to see these big numbers, because a couple of years ago when things were going down at certain times of the markets, it was just a couple $100. So as the portfolio keeps growing, these numbers just seem to get crazier and crazier as far as the total. So you can see here in the quarter, we're actually down about 15,000 overall, and then if we go to the year, we're down about 13,885. Now, I know for a lot of people that would be very worrisome, or even be like, well, why are you even sharing this if you're down so substantially in comparison to maybe some other people or whatever? Well, everybody's portfolios are different, so something to definitely keep in mind. As an overall, I'm actually only down about $7,700, just because the last year has obviously been pretty low. But overall, I've gained a lot of dividends over that time period, as well as sold some stocks in that meantime where I actually gained some profits, and that's where those kind of show up there. So even though I'm down overall, I'm actually still planning on buying more. I think if anything, this is the best time to be buying into the market and actually putting more into stocks. Now, granted, things can keep going down with how the market has been going, but I'm not going to try to time the market. I'm not going to be somebody who tries to say, well, I'm going to hold off, or I think today's the bottom. I don't honestly know, but if I keep investing, I think I will be in a good position long term. I started this portfolio with $100, so if somebody's like looking at $64,000 as a lot, keeping in mind that I started with a small amount and then I just started investing slowly as I kept going. I kept increasing the amounts and I got more and more comfortable. There's no way, if we swap over here, last month I put in over $5,000. There's no way I could have done that a couple years ago, just because I hadn't gotten comfortable and understanding how my portfolio was going to be set up. So starting off small is huge when it comes to getting started with investing. So let's go ahead and talk about these companies that I want to be investing a little bit more than I already am in comparison to some of the other stocks in my portfolio, because I got 18 holdings overall as far as positions go, ranging in anywhere from like Microsoft all the way to like Ally and Discover. Ally's a little cut off on the screen there. I think if I go back, you can see it right there. But so I got quite a diverse group of stocks here. I am pretty heavy on the tech side of things overall, but that's just going to be the way that I like to play this when it comes to investing for the long term. So what we're actually going to do is, like I said, talk about these companies. So the first one we're actually looking at is going to be with Google. So I actually do already obviously have a position with Google. Right now, the share price actually is going for 2,157. They are going to be doing a stock split in the near future, so that number is going to look way lower, but everything else pretty much stays fundamentally the same for the company. Currently, I have 2.799 shares with an average price of 2,300. So you can see I am down about $400 all time with this holding. So not really down a lot, especially in comparison to some of the other stocks I have in my portfolio. But let's go ahead and talk about why I want to actually be investing more into Google. So we're here on a website called Qualtrum. This is actually put together by Joseph Carlson. He's a pretty large YouTuber here as well on the platform. Some of the stuff is a little cut off, but I will zoom in as I need to with each of these individually. But here's some of the things we want to be looking at. One of the biggest things, if you look at the forward PE ratio of Google, we're looking at 19.46, which is a very solid PE ratio for me and like what I'm looking for. I love their profit margins with Google as a overall. And then if you look at their overall balance right over here, look at how much they have in cash after you take away their debts. Pretty substantial. Now, they don't pay any dividends, as you might have seen my portfolio is called Dividend Dennis, but I'm caring about dividends in the future, so I'm really paying attention to dividend growth and potential dividends in the future. If in the future they pay out dividends, great. If not, I can always sell them and go into other companies. But if we take a look at some of their charts here, you can see like their revenue is going up. Obviously, their last quarter that they announced, it had gone down. We'll see how the next couple quarters go afterwards. And if the stock keeps going down, because year to date, if you can see right over here, their year to date is actually down about 26%. So if it keeps going down, that's fine. I'm going to just keep on buying because it just is going to mean more value for my money. If we look at cash flow right over here, you can just see, obviously it had a drop from the quarter prior, but you're still looking at over $15 billion in cash flow. You can see like their net income right over here on this chart, and then you can see their earnings per share as well. Has definitely gone down as well, but again, when we're trying to look at the long term and where we want to be and where we think the company is going to continue to grow over time, that's going to give us a lot more opportunity. So what I'm planning on doing is to be investing more into this company. With their stock split, it's just going to have us go up higher with the amount of shares, but the fundamentals of the company still stay the same for us. So that's not going to be a huge difference there for us as a whole. But going into this and continuing to buy in for the long term, I think is going to be huge, especially with the market. Like I said, it's down 25% year to date. So actually, let me go ahead and take a look right over here. Year to date, yeah, it's down about 25%. Over the last year, it's down about 14%. So if you bought a year ago, you're actually only down significantly less than if you bought just, a little bit beginning of the year. Then you would be taking a much, much bigger hit. Over the last 5 years, you're still up 126%. And we can see here the stock price at $21.57. The last time that was around that price point was going to be pretty much end of March of 2021. So as of right now, it's over a year plus that we're getting that value. And if it drops as low as it was right before the 2020 crashes, you're looking at 1,500. I would still be buying. And I know some people are like, well, if it's going to be going to that point, why not wait until that price point gets there? Well, like I said, nobody knows everything for certain. Maybe it will go down to that price point. Maybe it won't, but I'm just going to keep on buying a little bit at a time. And what's so great about M1 Finance, and this is why I love this platform, is that it does let you do fractional shares. So when you're buying into companies, what was the one right over here, I think I bought into Google. So I put $200 into Google, and it gave me, 0.0932 shares of the company at that given time. So that's what I love about it. I don't have to buy a full share of the stock, especially at the current price point that it is. It makes it seem really, really unattainable for a lot of people. But when you put a little bit at a time, then you start building up a position into that stock. And that's why I have a little over 2.7 shares of the company. And then once they do their stock split, let me actually bring up a calculator just because this will be fun. So once they do their stock split, if I don't buy any more before the close, I forgot what day it was, but as of right now, with how many shares I have, I would actually end up having 55.99 shares once they do their stock split. So obviously the price of Google is going to go down as well too, so it's not going to be at 2,100. So that would be, let's do that divided by 20. So the stock price would be about $107 a share. Obviously, when you equal those out, you're still getting the same current value that it's at right now. So nothing changes on that. But obviously, being lower, some people will actually have access because some brokerages still don't do fractional shares. So that might be easier for some people to finally get into Google. Now, before we continue on with the next two, real quick, if you are somebody with student loans and you have some private loans and you have some pretty high interest, before interest rates continue to go even higher, definitely check out my friends here at Earnest. You can actually get your student loans entirely for free to be refinanced. It takes about 2 minutes for you to be able to do that. And then if you lower your interest rates, you could be saving hundreds, if not thousands of dollars during the course of that loan. That link will be in the show notes for you. They do actually give you a nice bonus for using my link, and you help out support the channel. So next up here, when we go back here, is actually going to be with Meta. And so for a lot of people, obviously this is Facebook, Instagram, Oculus, all that. I do have about almost 22 shares of Meta right now at an average share price of $230. They're down all the way to $163. So I'm down in my all-time about $1,457 with them. I am still buying even with it being down as much as it is, but that's okay for me because I am planning on holding them for quite some time. So if we look at some of the numbers here, forward PE ratio is now sitting at 14.08, which is phenomenally low for anybody that wants to get in at a really good price point with a company like this. Obviously, you can see they have a really good profit margins. For me, that just gives a lot more comfort with, like, if markets are down and people have to, take cuts. Some of these companies with higher profit margins can take bigger cuts and not have to see as big of a drop in and everything else that's going on with their like revenues. So obviously their cash flow would go down in their income. You can see over here with their balance, they're sitting at $31 billion after you take away some of their debts. They also do not pay a dividend. So again, not too worried about that, especially in the short term. I'm just looking for companies that will have some really great growth opportunities and great returns. They are actually down year to date 52%. I was going to go in here and bring this up here. This is on Seeking Alpha. So we just talked about this. So year to date, they're down at 51 or almost 52%. You can see obviously there was that big drop back in early February. Over the last year, still about 51%. And then if you go to the 5 years, you're actually only up 7.5%. Obviously, there was a lot going on with Meta and everything that was going on with the metaverse. And we'll see how that kind of plays out. But when you look at their books and you look at like their revenue, you look at their EBITDA, you look at their cash flows right over here. I'm trying to like move that thing out of the way. You just see all these, like, it's phenomenal numbers when it comes to like cash flow. Like last quarter, you're looking at $8.46 billion. Their EBITDA was $11.14 billion. Like, that's really solid numbers. You're looking at a company with like charts that are just very well put together with their balance sheets and everything else kind of coming together. Obviously, their expenses are going up. That you can see right over here as well too. And then what I do like too is that their shares are actually going down, not by a lot, but it is going down. The more that a company lowers their shares outstanding, the more value every share that you own is more valuable for you. So that's kind of a way to look at it as well too. So this is going to be a company that I'll be buying as well. And we'll see how it kind of plays out in that long term. And seeing where we can actually, have a really solid footing over the next couple months. And then if things kind of recover over the next year or two, we can see some really great growth opportunities with Meta. All right, so the third stock that I'm going to be buying more of is actually going to be in my retail here, and it's going to be Home Depot. Now, I already do have, of course, some holding in Home Depot right over here, about $6,000 worth. I'm actually only down about almost $700, but thanks to some dividends, I've actually would have been much more lower if that were the case. You can see right over here, we have about 22.45 shares with an average share price of 307, and it's currently trading at 270. So it's not that much lower than my current average price, but I am still buying pretty heavily. This stock right over here, if we actually go into Qualcomm, you're going to see some stuff here. Let me actually zoom back in a little bit, and then we'll go into the charts individually. So the PE ratio you can see here is at 17.04. So you can also see here the balance. This is the biggest thing is right now they have quite a bit of debt. So this is the biggest worry for me. You can see they do actually pay out a dividend, and because the price of the stock has been going down, the yield has been going up. So if you're somebody who does care about dividends, what's really cool is that the dividend yield is quite a bit higher currently, and they do have a typically really nice increase year after year when it comes to dividend growth. So something to keep in mind for those that want to kind of pay attention to that. Now you can see here, year to date, actually can I bring this up? So year to date, you can see here we're actually down about 34% on the price. So if you bought it at the very beginning of the year, you're down pretty significantly. But if you go to the last year, you're actually only down about 11%, which is not bad when you compare it to where some of these other companies are in the last year or even the last 2 years as well. Because if you've invested 2 years ago, you're actually still up about 9%. Obviously, if you've been buying, back and forth between like highs and lows, you might be a little bit different than that price point. But dividends also play a big factor in. You saw that on my account where the dividends actually helped me stay less negative than what some other stocks at that same percentage would have dropped. So one of the other things we want to see here is revenue is obviously still going up. Even in the last quarter, I was trying to like click on there. You can see right over here, the last quarter was 38.91 billion, and that was from the month or the quarter prior at 35.72 billion. So we saw a nice increase. Obviously, the next quarter results are going to be very important to see. Is there going to be a possibility for a decline? But you could even see here with with Home Depot, it goes up and it goes down, it goes up and down. So it's not like every single quarter is going to be a consistent up, but long term, you're going to typically see the stock price or the revenue continue to go up. Same thing with EBITDA. You can just see that nice growth with EBITDA right over here. And then if we look at cash flows have gone down pretty significantly in comparison to some of the other quarters prior, but I think overall they're still doing a really, really solid job, especially when you compare that to even decades prior. If you look way back here, there's a lot of cash flow quarters where it's going into the negative at a consistent basis. And this is one of the very few where in 2020, when normally everybody was going into the negative with cash flow for even 1 or 2 quarters, they actually did not do that, which is really, really nice. So I mentioned about the debt. So you can see actually over here, the debt is going up pretty substantially just from quarter to quarter. I do believe that, if I'm not mistaken, in one of their reports, they did mention that they actually are going to be focusing in on bringing this debt down. So as long as that's going to be the case, but if you look at this, I mean, they unfortunately have had debt for quite some time, and it hasn't really subsided. So we'll see how that goes overall. They are less cash heavy than they were even in 2020. So that can play a pretty big factor in, making decisions, being able to reinvest for the long term. And then you can see their earnings per share have actually continued to move up as well. But like I said, the debt would probably be the biggest thing when it comes to Home Depot, when it comes to, wanting to, stay invested with them long term. So if their position is to lower some debt, that's going to be really, really good. Now, one of the other things with Home Depot too is that they have been lowering their outstanding shares, and I believe I can get that right on screen here. So back in, what was that? Kind of off screen still, but it looks like it was April of 2017, it was about 1.19 billion, and now it's all the way down to 1.03 billion. So definitely lowering their outstanding shares, and they've definitely also been doing that for quite some time, which is always a nice thing. But the biggest worry for me, again, would be their debts, and if they can't be lowering them and or increasing their cash flows, that's just something to kind of be worried about. But long term, I still see this as a good value for me and holding it into my portfolio, which I'll keep on buying more and more with. Now, if you want to let me know what stocks you are going to be buying a little bit more heavily over the next couple of weeks or months, put those in the comments down below. I would really like to hear from you guys. And if you're not already, make sure you subscribe to the channel, hit that like button, and then I'll place another video right over here for you to keep on watching. My name is Dennis, and I'll see you in that next video.